Bill, what exactly do you think Trump wants from Canada?
More. But look, what I'd like to see, Canada become our 51st state.
President Trump once joked that the U.S. could make Canada its 51st state. But for many Canadians, the remark wasn't funny. It reinforced the sense that America no longer treats them as a true partner. As Trump's tariffs reshape North America's economy, Canada is pivoting. And Beijing is listening. So why is Ottawa suddenly reaching out to China? And what does that mean for America's economic future? Let's take a closer look. Since January, the Trump administration has slapped Canada with a series of tariffs. 25% on steel, aluminum, vehicles, and even crude oil. In public, Trump has framed these as leverage. But in practice, it's driving a wedge between two of the world's closest allies. Prime Minister Mark Carney responded directly by stating that Canada no longer considers the United States a reliable partner. With Canada's economy deeply tied to trade, this shift in tone signals something bigger. The government is now actively seeking alternatives, and China, its second-largest trading partner, is at the center of that pivot.
The Canadian government is engaging with its Chinese counterparts, including at the ministerial level, and we'll continue those discussions. They are a top priority for us.
It's not a surprise that Prime Minister Carney has started to look towards how can we have a more stable and expansive trading relationship with China.
One of the most notable developments is in energy exports. According to Reuters, May 2025, Canada's crude shipments to China have jumped to an average of 207,000 barrels per day, up from just 7,000 barrels per day during the previous decade. The turning point came with the expansion of the Trans Mountain Pipeline, which now gives Canadian oil direct access to Pacific markets, bypassing U.S. refineries entirely. Meanwhile, agriculture is also front and center. China imposed 100% retaliatory tariffs on Canadian canola oil and meal earlier this year, after Canada followed U.S. moves to slap tariffs on Chinese electric vehicles. But despite ongoing tensions, Prime Minister Carney identified the removal of Chinese tariffs on canola products as a top priority, emphasizing that the objective goes beyond restoring market access. It's about building a broader, long-term trade relationship with China. The urgency is real. Canadian farmers, particularly in Manitoba and Saskatchewan, have seen exports decline sharply. In response, Ottawa has reopened dialogue with Beijing at the ministerial level and reactivated the Joint Economic and Trade Commission, JEC, to create a formal channel for negotiations. This outreach to China isn't about agreeing with China's values or political system. It's about protecting Canada's economy in response to Trump's tariffs. As Carney noted, Canada still raises serious concerns, including fentanyl precursors, election interference, and human rights issues. But the priority now is protecting domestic jobs and economic stability. Former Canadian ambassador to China, Guy Saint-Jacques, said Prime Minister Carney understands that dialogue with China is essential, even amid differences. He noted that dialogue is better than no dialogue at all, and emphasized the need for Canada to diversify beyond the U.S. Beyond trade volume, China still accounts for roughly 20% of global demand for Canadian exports, especially in energy, agriculture, and critical minerals. And in a world of rising protectionism, Canada is seeking what one might call a managed engagement, cooperating in some areas while drawing firm boundaries in others. The bigger shift here is strategic. Canada is no longer assuming that U.S. trade leadership is stable or permanent. This doesn't mean abandoning the U.S., but it does mean diversifying. That clarity is shaping how Canada handles not only China, but future partnerships with the EU, ASEAN, and others. Ottawa is looking for a rules-based reset, not another power imbalance. From oil exports to renewed talks on canola, Canada is repositioning its trade map, and that includes Beijing. Trump's tariffs may have aimed to assert strength, but they're now pushing allies to seek new ground. For Canada, the path forward isn't about choosing sides. It's about building resilience. And that might just reshape North American trade for years to come.
There are hints Canada and the U.S. are moving closer to some kind of deal on trade. Last week, the government confirmed Canadian Prime Minister Mark Carney has been communicating directly with the U.S. president.
I think, if they're negotiating with each other and talking on a regular basis.
As Washington wraps up a high-profile trade deal framework with China, one that maintains 55% tariffs but secures U.S. access to rare earths, another critical trade relationship is back in focus: Canada. Ottawa and Washington are now quietly advancing their own talks. The key question is whether the U.S. will shift its attention to lowering tariffs on its closest neighbor. This matters, as businesses and consumers on both sides of the border are already feeling the economic pain. Let's take a closer look. According to CBC News and Global News, Canada and the U.S. are actively exchanging draft positions on a potential trade deal. Documents covering tariffs and trade terms have been shared between Prime Minister Mark Carney and President Trump. At this stage, both sides are not yet ready to exchange a comprehensive draft agreement. Still, U.S. Ambassador to Canada Pete Huckstra confirmed that the two leaders have been in frequent direct contact. They are expected to face questions about trade progress when they meet at the G7 summit in Alberta. While Huckstra would not predict an imminent deal, he described the tone and direction of talks as positive. In short, a deal is not done yet, but momentum is building.
Aluminum to Arctic security to that Golden Dome. What's on a private document passed back and forth between Ottawa and Washington?
Both governments have strong reasons to reach an agreement. For Canada, Trump's tariffs have already caused damage. The U.S. imposed a 50% tariff on Canadian steel, leading to job losses. The Canadian Steel Producers Association reports that more than 700 steel jobs in Canada have been lost, with thousands more at risk. The tensions are also hurting American businesses. Canadian tourism to the U.S. has dropped sharply. According to statistics, Canada, car travel to the U.S. fell 38% in May 2025 compared to a year earlier. Air travel fell 24%. The U.S. Travel Association estimates that every 10% drop in Canadian tourism costs the U.S. about $2.1 billion and roughly 14,000 jobs. With tourism down over 20%, the financial hit is already substantial. Air Canada reported double-digit declines in U.S.-bound bookings, and U.S. carriers like United have cut capacity on Canadian routes. The growing economic costs on both sides now make a resolution more urgent than ever.
For a while now that I think critical minerals is one of the things that will unlock what the Prime Minister has said is a new relationship with the United States.
As U.S. industries face supply chain vulnerabilities, Canada's position at the table has never been stronger. Critical minerals are a key example. Canada is already the largest single-country supplier of minerals to the United States. According to the Center for Strategic and International Studies, Canada provides 90% of U.S. potash imports, 50% of aluminum, 30% of uranium, 25% of steel, and key rare earth elements such as germanium and gallium. These materials are essential for semiconductors, clean energy, and defense. CSIS analyst Chris Hernandez-Roy described critical minerals as one of the strongest cards Canada can play in the talks. A recent example illustrates this urgency. In May 2025, Ford temporarily shut down its Chicago plant for a week due to rare earth shortages. While this was tied to global supply issues, Canada's stable, trusted supply gives it leverage. Canada is also scaling up production. Saskatchewan's new rare earth refinery, built by the Saskatchewan Research Council, is now producing materials for U.S. defense contractors, helping Washington reduce dependence on less reliable sources. Now that the U.S. has secured a trade framework with China, will Trump prioritize resolving tensions with Canada? The economic pressures are clear. Businesses are struggling. Consumers are paying more. Both economies need relief. Although a full agreement at the G7 is unlikely, the trade talks are moving forward. With Canada's critical leverage and mounting economic costs, progress is not just possible, it is increasingly necessary.
As a matter of fact, now both U.S. and China realize how indispensable we are. We are really cannot separate, cannot decouple, and the world economy really need us, and also the confidence, stock market, oil prices, you name it, all hinge on this China-U.S. Trade talks.
President Trump has declared, "Our deal with China is done. pending final approval from President Xi and me. The latest framework, reached in London, promises that China will supply rare earths to the US, while the US will ease visa restrictions for Chinese students. But here in Washington, skepticism runs deep. Many officials, and Trump himself, point out that China hasn't always honored its past trade commitments, including the Phase 1 deal. So, will Beijing really deliver this time? And when China claims it does not weaponize rare earths, is that true? Let's take a closer look. Trump's declaration of deal done sparked headlines, but also serious doubts. The new framework is only an agreement in principle. There's no binding enforcement, no dispute mechanism, and history offers reasons for caution. After the Geneva deal just weeks ago, China temporarily tightened rare earth exports, despite agreeing to ease restrictions. China's own Ministry of Commerce reported that U.S. imports of rare earths dropped 5.7% in May. Meanwhile, a recent AmCham survey found that 75% of major U.S. firms expect to run out of rare earth supplies within 3 months if restrictions persist. Policymakers here also note that China did not fully honor its Phase 1 trade deal, a warning signal for any new agreement. But the situation isn't one-sided. Some of today's volatility stems from the U.S. itself.
Since the Geneva talks, we see some U.S. Lifted, new sanctions. No, actually added new sanctions, but also new measures on chips and on Huawei, on many other parts of the supply.
After Geneva, the Trump administration expanded export controls on chip design tools and warned global partners against using Huawei chips. It also initially kept tight visa restrictions, only loosening them under the London framework. China's response, slowing rare earth exports, was partly a reaction to this policy instability. This tit-for-tat cycle helps explain why trust is now so fragile. Yet publicly, Beijing maintains a different narrative, insisting that its export controls are guided by market principles, not political retaliation.
That is why China always repeated, they say such a regulation or export control does not target at any single country, but for the whole market rule.
So what is China's message? As Yang Xiu, senior fellow at the China Institutes of International Studies, explained that China's rare earth export controls are guided by market rules and dual-use management, not designed to target the U.S. Yang said that export controls are driven by national security concerns and the dual-use nature of rare earths, not by targeting the U.S. Yet the facts tell a more complicated story. After Geneva, rare earth shipments to the U.S. declined, and Chinese analysts admit that U.S. actions contributed. Wang Huiyao, president of the Center for China and Globalization, warned that trust was damaged because the U.S. kept adding new measures. If that continues, he said, confidence will erode further. Brian Wong of the University of Hong Kong noted that China remains highly cautious about trusting the Trump administration, given its track record on past trade deals. In short, when Beijing says it won't weaponize rare earths, many in Washington hear, unless provoked. That leaves little room for complacency.
How can we make sure that after this so-called framework, the United States is not going to do the same thing?
So where does this leave us? For now, the London framework is a fragile ceasefire. There's no binding enforcement. The WTO's appellate body remains defunct. China signals that it will comply, if the U.S. refrains from new provocations. But Beijing retains full discretion over rare earth exports, and experts warn that these materials remain a potent strategic tool. Meanwhile, Trump's own unpredictable policy shifts add further uncertainty. With new tariffs and export controls still on the table, the path ahead is anything but stable. And with rare earths still a key source of friction, the stability of this framework remains uncertain. Trump says, deal done. China says it won't weaponize rare earths. But given history and recent actions, caution is warranted. For now, the U.S.-China trade relationship remains balanced on a knife edge. And unless both sides build genuine trust, this latest deal may prove no more durable than the last. We'll be watching,